Okay, picking it back up here. Rent is another thing that you might be asked to prorate either on a closing statement or just as a separate test question. This is a good candidate just for a separate test question. The reason we might have to prorate rent is for the same reason we have to prorate taxes. Most of the time our closings happen in the middle of a month. And if closing happens in the middle of the month, it's very likely that rent has already been paid for the whole month in advance. Does that make sense to everybody? So like, for example, if we close today, September 4th, there's a pretty high likelihood that the seller's already collected rent on September 1st for the whole month of September. The problem is they're not owed that much rent. They're only owed for how many days? 4 days. When we talk about prorating rent, you're going to use the exact same system that we just used for prorating taxes, except because rent is a monthly deal, you're not going to write that, you know, the seller's from the beginning of January through the day of closing. You're going to write from the beginning of the month. Does that make sense? And also, because it's rent, you're not going to write seller owes and buyer owes. You're going to write seller is owed. Buyer is, does that make sense as well? Because it's rent. So, like in this example, it says closing on September 9th on a home that's rented for $900 monthly. I would write seller is owed rent from what date to what date? Closing on September 9th, so what would I write down?
September 1st.
September 1st through September 9th. And then buyer is owed rent from September 10th through September what? 30th. Does everybody follow me on that? Okay. We're going to do exactly the same thing that we did previously. We're always going to prorate the seller's side. Yes, ma'am. Teresa. Yep.
Is the rent going to follow the same situation with 30 days and 31 days?
Yes. Always 30-day months. Which makes sense in rent if you think about it, because you pay the same rent in February you pay in January. Okay? So, we've got our proration written out. We're always going to do the seller side because that's the easier one as far as number of days. How many days is the seller owed for? 9 days. Okay? 9 days. And we're going to take that $900 monthly and divide it by what? 30 to get it down to daily. So that's $30 a day times 9 days. That's $270. Everybody with me on that? And that's the seller's number, 270. Well, we can always go back and get the buyer's number by simply doing what? Subtracting from the total. So if the total rent is $900, we subtract that, 270, which is the seller's, and what does that leave us with, 730? 630, sorry, 630? So $630 is the buyer's side. Now we just need to figure out which one to circle, which one. So, since rent has already been paid to the seller, we're going to still circle the opposite. So what's the opposite? Which one are we going to circle here?
Buyer.
The buyer. We would circle the buyer's number. And then look at the language. Buyer is owed. Does that sound like a debit or a credit? Credit. So we want to credit the buyer for $630, and if we credit the buyer for $630, what are we going to do with the seller side? We're going to debit the seller. Does that make sense for everybody? So that would be $630 debit seller, $630 credit buyer. Still the same number on both sides, both columns, for a rent proration. Okay? So why don't you, let me give you guys one real quickly to do for yourself, just to make sure you're good on a rent proration. Let's say we're closing May 18th, and the monthly rent of $1,200 was collected by the seller. I want to know what's going to be the closing statement entry for that rent. What's going to go on the closing statement for rent? Closing on May 18th with monthly rent of $1,200. Did you all write down those two statements?
Yes.
Okay. So we're gonna, which side are we gonna work on? Always the what? The seller side. So how many days do we have for the seller? 18 days.
Wait. Okay.
Yes.
With rent, we always work with the seller?
You always work with the seller with any proration. You're always going to do the seller side, and then to get the buyer side, you're just going to subtract from the total. You do not sit there and play guessing games and try to figure out which side to prorate. Always do the seller side, and then subtract from the total to get the buyer side, and then decide which one you want.
It's just easy math that way.
The math is just cleaner that way because you're being consistent.
Okay, okay.
Okay? So we got 18 days. What'd you come up with for a daily rate? 1,200 divided by 30 days. What'd you come up with?
$40.
$40 per day. Does everybody agree with that number?
Mm-hmm.
Times 18 days. Oops. Times $40 a day. How much money is that? $720. And that's whose number?
Seller.
The seller. So we're going to write that up here with the seller, 720. And the buyer is just going to be the difference between that and the total, right? So to get to the buyer's number, we're going to take the total of 1,200, and we're going to subtract the seller's 720. And so what do we end up with? 480 is the buyer's number. See what I mean, Michelle? Do the seller side first, and then you just subtract from the total to get the buyer side. Because together they're owed the whole $1,200.
Okay.
All right? You're not doing two separate prorations. You're just figuring one side, and then the remainder goes to the buyer.
The remainder, maybe.
Okay? So we know both prorations. Now the question is, which one do we need? They told us that rent was collected by who?
The seller.
Seller. So whose side do we need?
The buyer.
We need the buyer's side. Circle the buyer's side. Buyer is owed. Is that a buyer debit or a buyer credit? That's a buyer credit, and if it's a buyer credit, it must also be a seller what? Debit. So it's going to be $480 buyer credit, $480 seller debit. Is that starting to click in on these prorations? And it would work the same way for just about anything you could possibly think of. I'm going to write another one up here and let you do it, and I'm going to walk around and see.
What was the seller debit?
It's the same as the buyer credit.
I'm sorry?
The seller debit?
What did we circle?
Oh my glasses. For the buyer, for
Buyer is owed, right? What does that sound like? A debit or credit for the buyer?
No, yeah, I got, right.
Well, if
buyer
you got
credit.
one, you've got the other. You shouldn't have to ask because it's the opposite for the other side. Do you have buyer credit?
Right.
Then what is it automatically on the seller side? Don't think, just answer. If it's a buyer credit, it's automatically a seller what?
Right, but seller debit, right, but what's
Okay.
the amount? Oh, it's still
The same amount. It's always the same amount on both sides.
Okay.
Always.
That's right, that's right, okay.
That's why you just kind of have this step-by-step progression, because it just takes you right to the final destination. There's one other thing that could be prorated. It's homeowners dues. Homeowners dues can also be prorated on a closing statement. In fact, they almost always are. So, we're closing on October 10th. HOA dues are $75 per month. Seller has paid for full year in advance. Everybody got that? Closing on October 10th. The HOA dues are $75 a month, where the seller has paid for the full year in advance.
No, we ain't got no sheet that say this, right? We just.
No, I'm just making them up off the top of my
Okay.
head. Because I want to see if you got it, because you're going to have plenty of these on the example worksheet that
Okay.
you're sending home, but I want to make sure your brain's working right with
Okay,
these prorations.
so
This is from my
HOA
feedback.
fees can be prorated. We'll,
So the first question on this one to ask yourself is, do I need to prorate the whole year or just the month? That's going to be the first question.
okay, paper.
All right, let's talk about it. First of all, am I prorating just the month or am I prorating the whole year? I got to prorate the whole year because the seller's already paid for what? The whole year in advance. So we got to prorate the whole year. Okay? So you should write seller owes January 1 through October 10th and buyer owes from October 11th through December 30th. Everybody get there?
Oh, no.
Okay? We good with that? What'd you do?
Nothing.
Well, you were nodding when you said the whole year, so what'd you write down that was different than that?
The October 1st through October 10th for the first line, and for whatever reason, October 1st through December 30th for the second.
Okay, so if you're prorating the whole year, you got to start at the beginning of the year, right? And this is always going to be day of closing, and this is always going to be day after closing, okay? So the only question is this going to be beginning of year, end of year, or is this going to be beginning of month, end of month? Okay? In this case, it's year, right? As far as the number of days, if you add it up, you come up with 280 days for the seller. Okay? So, to get to the daily amount, I want to take that $75 a month and multiply it times 12 because I know I'm going to need the annual amount anyway, since I'm prorating an annual amount. So I'm going to take the 75 times 12. You could have also divided 75 by 30 to get to the daily rate. That would get you there as a daily rate anyway. Okay? All right? So that's $900 a year. And what does that work out to daily if you divide it by 360? $2.50. Everybody okay on $2.50 a day? So $2.50 a day times 280 days equals $700. So the seller's share of the HOA dues for the year is $700. Everybody agree with that? So the buyer's share then is going to be the difference between the annual and that number, correct? And we said the annual was how much money? 900, right? Minus the 700 the seller owes, so the buyer's share is $200. And now we go back to the thing and see what they told us about the HOA dues. Seller has paid, don't even think, just grab the opposite. So what are we going to circle? We're going to circle the buyer. So our proration, we know the number we're going to use is $200. We know it's going on both sides, buyer side and seller side. Is this a buyer debit or buyer credit? Buyer owes. What is that?
Debit.
Buyer debit. So therefore it must also be a seller credit. $200 on both sides. Uh-oh, what?
I put seller debit, buyer credit.
Okay. Did you circle the right one?
Yes, I did.
All right. So then you got to read what you circled, right? That's the other key thing. You're circling it for not just for the number, you're circling it for the language. Buyer owes is buyer what?
Okay, I was
Debit.
thinking like owes, like they're owed to.
No, not owed to. They're not paid HOA dues. They owe HOA dues, just like the seller owed. See, here's the problem, JJ, and this is what happened. You're trying to outsmart the closing statement. It's not set up that way. It's set up for you to be completely like a dumb terminal, right? And so, and that's what you have to do with it. You just have to say, okay, the seller owes this part of the year, the buyer owes this part of the year. Who's already paid? Well, then we get the other one. And then the debits and credits takes care of the math for you. You're trying to think 3 steps ahead, and it's causing you to get the reverse answer. Does that make sense? So when you circle buyer owes, follow that direction. Don't think. Buyer owes is a buyer what? Debit. Every single time you see the word buyer owes. The only time you would see anything other than buyer owes, you would see buyer is owed, and that would be for what? Rent. The only thing that we prorate that's owed to people is rent. Everything else we prorate is seller owes, buyer owes. Yes, ma'am.
So the $200 will go on both sides when you write it in the lineup.
You got 4 columns, right? It's going to go in 2 of those 4. It's going to go, $200 is going to go in the buyer debit column, and $200 is going to go in the seller credit column. You're not going to do anything with the $700 number. They can go anywhere. Okay? You feel alright about proration stuff? Yes, ma'am, Mom. Or you just waiting?
That hurt.
You just working your elbow? Marla fell down, so she's having, a little bit too much time.
Oh, okay.
Good?
It's because they owe for the rest of the year, so it's coming out.
Again, you just think, if you're thinking that hard, you're thinking too much about it. I get that it helps you to understand, but I'm telling you, thinking on these things will be a detriment, because you can think yourself into it going any way. The best thing is just to develop a system, and you literally just follow the directions. Because like when we get to escrows, you start thinking and you'll mess them up every time. Because if it says they want you to escrow 5 months of property taxes, what are you going to do? You're going to escrow 5 months of property taxes. Then you get to the next line and it'll say, or he'll say this: you're going to escrow 2 months worth of homeowners insurance. So what do? You escrow 2 months of homeowners insurance. On the next line it says the full year of homeowners insurance policy of $1,000 has to be paid at closing. What are you going to do? You're going to pay the full damn year at closing, and you're not going to sit there and argue with this thing about, well, I'm not paying a full year if I just escrow too much. Because damn it, they told you to. And that's what I mean.
You sound like my granddad.
But that's what, and I understand that mindset because I'm that person, because I want to understand it so badly that I sit there and argue with the thing. The truth is, sometimes you'll never understand why they're saying to do that, because there is no logic behind it. It's just follow the directions. So if they say escrow 2 months and they say charge a full year, what do? You escrow 2 months, charge a full year. It comes out, that's right. You have to accept that it comes out in the wash later on as a part of setting up the escrow accounts and that sort of thing. But for your purposes here, closing statements really are just and you're going to see it because we're about to get to one where we put the whole thing together. They're really just a set of directions. That's all they are. Yes, sir.
I messed up on the seller owes and buyer owes. Can you explain that again?
Okay.
I can follow that.
Sure. It's whenever you're prorating, you're going to write these 2 statements. Always. And if you're prorating the whole year, like we are in this one, the seller owes, what are we prorating? HOA dues, right?
Okay.
So the seller owes HOA dues from what day? What's the beginning of the year? January 1 through what? Day of closing. So that means the buyer owes from October 11th through the 30th. And then you're always going to prorate the seller side first, because that's the easier one to deal with. And then you're just going to take the difference to get the buyer side. Keeping in mind, you've made no decision about which number you're going to actually use. You're just getting the numbers at that point. Is everybody with me on that? Mm-hmm. Then once you've got both numbers, and only then, do you go back and look at what they tell you to do with the money. And that's when you decide which one to circle and which one to use.
Say that one more time, that last sentence.
Okay? Once you've got both numbers, your problem is that you want to answer the question before you've got an answer to the question. In other words, you want to take a shortcut. If I need the buyer side, I only want to do the buyer side. You'll mess it up. I've seen it too many times. So what I'm saying is, prorate both sides. Do the seller side, because it's the easier side. And the buyer side is always just going to be the difference, right? It's going to be the total minus the seller side. Once you've got both of those numbers, then you go back and you look and you say, what am I doing with the money? And that's what this statement is for. What it says, seller has paid. Don't even think. Don't even let yourself think. Who did they mention? Seller. So who do you circle? There you go. You do the opposite.
Buyer debit.
If they mention the seller, you circle the buyer. Now, as far as the debit and credit part, that's what the language is for. Buyer owes is a buyer what?
Debit.
Debit. Okay? And that means it must also be a seller credit. Yes?
Can I key on the word paid and just without thinking, just say it says paid, so then do opposite owed? Write down owed. So somebody paid, can I do the opposite,
That's
say
what you
owed?
did.
You're gonna confuse yourself, because you don't know which one is
You
going to
don't,
win.
so I could word it so that's not gonna work for you though.
No, that's what I'm asking.
That's so,
That's what I was gonna, that's what I was
Okay.
gonna say.
It's not owes, because you don't know which one you're going to owed. So if you put paid, you're gonna
Right.
confuse
So
yourself.
that's, I understand where he's confused.
That's where I'm confused.
It is owed, as we just did in the last example.
because rent is owed
Right.
versus HOA dues, you owe, right? The buyer owes HOA dues.
Right,
You aren't owed HOA, the buyer is not owed HOA dues.
right, it's a bill.
It's a bill you pay.
Yeah.
You are not owed taxes, you owe taxes, you're paying them out. But rent is money coming what? In, that's why you write the language buyer is owed, seller is owed. The truth is, look, the most common one of these prorations is gonna be taxes. You're gonna have taxes on every one, and that one's always gonna be buyer owes taxes, seller owes taxes. Because there's no such thing as the buyer being owed taxes. That's you trying to outsmart the thing.
So do I always say owes? Always
Yes,
owes? Just-
unless it's rent. Unless it's rent. If you're prorating rent, put the word rent in the sentence. Would you say the buyer owes rent? Or would you say the buyer is owed rent? Which would you say? If you're buying a house that's rented,
No, it's not owed rent. Or-
if you're buying a house that's
Yes,
rented,
owed rent.
buyer is owed rent. Would you say the seller owes rent, or would you say the seller is owed rent?
Oh, it is owed rent.
There's supposed to be is owed when it's rent. When it's taxes, you're never owed taxes, you owe taxes out to the county, right? So when you're talking about taxes, buyer owes taxes, seller owes taxes.
For taxes and HOA, you're sending it out to somebody
You're
else.
trying
For
to
rent,
think
rent
your
is
way
within each other.
through it. Stop.
It's a bill, just look at it as a bill.
Yes.
It's
It's
a
not.
bill. They both owe it.
Okay.
They both owe it. What you're trying to do is in your brain twist it around and go, well, if he paid it and he owes that and he did, that will get you into a trap. If you want to do it that way,
No,
more power to
that's
you.
why I'm talking to you.
I know you are, but what I'm saying is, I used to do it the same way you did.
I'm taking your word completely.
And I know you are, and I know you're earnest about it. Your way's not wrong, because you're trying to logically understand it, but your way causes you to make mistakes, right? This is meant to be the simplistic version of it. Now, if this doesn't help, obviously don't use it.
Yeah,
But I
that's
think
fine.
if you would just get used to writing those statements, and then
Yeah,
going back.
Yeah, I'm trying to get that down.
Yes, ma'am.
I think a little bit for me is a balance between what JJ doing and what you saying, because obviously the seller already paid everything, and it's already paid. So the buyer got to owe something back because the full year's already paid.
Right.
And then who you gonna pay it to? You gotta pay it to the seller.
And I'm telling
You know,
you,
and
that
so that's the
logic
credit.
works for you, it
Yeah.
works for me. But there are some people that cannot logic their way through it, so they need
This.
this. And
But
there's
this
nothing wrong
keeps
with
it,
that.
this keeps it simple though.
It does.
Because it's only one number going on both.
That's right. And that's the other thing. You're only using one number. That's the whole, I'm circling one number, so I'm only using that one number.
Well,
Okay?
technically, it's two numbers.
No.
It's not.
It is not.
Only
You
one
got
gonna go on.
700 up there.
No, but you're only using one of
You only
them.
go-
I know.
But that's
broke
what's,
down two.
but that's
But
the
I'm
only thing
only
that's
using
important.
one of them.
Okay. Okay.
And that's the whole point of circling one.
Yeah.
Because it is a very visual reminder of only one of these numbers matters.
You
The
can't,
other number has no use for me.
Okay.
and it doesn't have any use on the statement. That's the
Doesn't have
most
any use on the
important
closing
statement. What
It's
goes
not
on the
gonna show
statement.
up. You will not see $700 as an entry on that closing statement anywhere.
Alright.
What you will see is $200 twice.
And then where do you put the 200?
You put it as a buyer debit, seller credit.
Because I'm the seller, I want my money back.
That's right. You want to be credited for your money you paid.
Give my money back.
Okay? All right, so just as a recap of where things go. Some of these we haven't talked about yet, most of them we have.
Okay,
Sales price.
on both sides.
Buyer side, seller side, or both?
Both sides.
Both sides. So what is it on the seller side, debit or credit? It's a credit on the seller side, and so therefore it must be what on the buyer side? A debit. You will never see something be a credit on both sides. You'll never see something be a debit on both sides. Now you might see that in the real world in some odd situation, but for test taking purposes in this class, you will never see on the same line something be a credit on both sides or a debit on both sides. Does that make sense for everybody? If it's a debit on the seller side, it's a credit on the buyer side. So for sales price, that is a buyer debit, seller credit. Due diligence fee. Who paid it already? The buyer did, so we need to give them credit for it. So that's a buyer credit. Who got it already? The seller did, so we need to take it back from them. So that is a seller what? Debit. And here's the way you have to think of that, because I know sometimes people struggle with why would I debit the due diligence fee from the seller? Look at what you just credited them for on line 1. You credited them for the whole what?
Sales price.
Sales price. So if you were selling the house to them for $100,000 and you paid them a $1,000 due diligence fee, all right? Now you just credited them for $100,000. How much money do they have total? They have 101 because they have the $1,000 you gave them when you went under contract, plus you just credited them for the full purchase price. So how much do they have? 101. What do you need to do? You need to take the $1,000 back. That's why the due diligence fee is a seller debit. Does that make sense for everybody? So due diligence is going to be buyer credit, seller debit.
Because that's gonna come off the principal amount.
Yes. You've already paid it to them. Okay? You okay? Yes?
Yep.
Okay. Next line, earnest money deposit. Notice it's only on one side. It's not on both sides. It's on the buyer side. They already paid it, so we want to give them what for it? We want to give them credit for it. Why do we not have to take the earnest money deposit away from the seller?
Because we don't get it back.
They never got it, right? You don't take away from them what they never got. It's sitting in a trust account.
Thank you.
So you do not take it away from them because they would be short money at that point in time. Does that make sense? Okay? The new mortgage loan we did talk about. Who's getting a new mortgage loan? The buyer. Are we crediting that money to them or debiting it from them? Crediting it to them. We are crediting them with their new loan. Otherwise, they would be way short of money.
Okay, no, okay, now, I just got, now you said with this earnest money deposit, already, obviously the buyer already don't put it up, because you
Yep.
want everything to go through. And it's in escrow, it's in a trust account. So, it ain't gonna sit in that trust account forever, right?
Whose trust account's it in?
It's already in the seller's?
On the day of closing, that seller doesn't have a trust account.
Alright.
It's in the lawyer's. It's in the closing
Oh,
trust account.
so that money go to the lawyer?
Not to the lawyer, but
Okay.
it's part of the transaction. It's going in the pot of money that the whole transaction is. That's why we gotta give the buyer credit for it. It just becomes part of the money. All the money's going in the closing attorney trust account. Every penny.
Okay, and so, in the end, it is still flushed back to the seller. in the
As part
end.
of the purchase price, because we already credited them the full what? The full sales price. They got that because they just got credited the full sales price. I just handed you $100,000.
Okay, so being that they credit the full sales price, that covers that.
It's part of the sales price, right? The earnest money's not in addition to the sales price, it's part of the sales price.
Okay,
So we don't need to make any adjustment at all on the seller side for the earnest money. That doesn't show up, just buyer side. Commissions, who's usually gonna pay the commissions? Sellers, that's a seller debit. Seller debit. Excise taxes, who pays them? Seller, seller debit. All your loan expenses, discount points, origination fees, any fees associated with the loan, interim interest, all of those will be paid by who?
bye.
The buyer. So that's a buyer what?
Debit.
Buyer debit. Buyer debit. Okay? Everybody good so far? Okay?
But wait,
What?
can we go back to the excise taxes?
Mm-hmm. What about excise taxes?
I'm just trying to process that the seller pays the excise tax.
That's just a straight up memory thing.
Okay.
There's nothing to process. The seller pays the excise taxes. It's a sales tax. Sales taxes are paid by sellers.
Okay.
Okay? Contrary to popular opinion, it's the seller who pays the sales tax, always. I guarantee you most of you have never written a check to the North Carolina Department of Revenue for sales taxes. Yes, I know the retailer adds them on, but ultimately who pays the state the sales tax?
We do.
The seller does.
It's over.
Sales taxes are paid by sellers. The retailer adds it in, right? But could the retailer choose not to add it in and pay it anyway? You ever bought something out of a vending machine? They don't add the sales tax, guess what? It's already factored into their pricing. They still have to pay sales tax. Sellers pay sales taxes. Excise tax is a sales tax. Okay?
Okay.
Property taxes, I've got them in two different places because it could be two different things. Remember with the proration, it's either going to be debit seller, credit buyer, or it's going to be debit buyer, credit seller. That's what the whole circling one is about. It's going to be one or the other, but it's always going to show up in two columns. And they always have the same number, and they always offset each other. So if it's a buyer credit, it's always a seller what? Debit. If it's a buyer debit, it's always a seller credit. And it's always, always, always the same amount on both sides for your purposes in this class. In the real world, I'll be honest and admit, it won't always be the same number. Different closing attorneys and different lenders have different ways they fill these out. But for test taking purposes, for you guys, it will always be the same number and it will always offset.
Okay.
Okay, everybody good with that? Recording fees. Recording fees could be either party. That's where you're going to have to stop and think. Who would pay to record the deed? Whose deed is being recorded?
The buyer.
The buyer. So the buyer would pay to have the deed recorded. What if they said there was a fee for recording the seller's satisfaction of mortgage? Who would pay to record the seller's satisfaction? The seller would. So you just have to read whatever it says about recording expenses and apply, you know, that to whose column you're going to put it in. No matter whose column you put it in, it's never going to be a credit. It's always going to be what?
A debit.
A debit, because it's a fee they're paying. The other thing I want to point out to you here that you have to be careful of, and it's really the only catch of doing closing statements. Sometimes they will include fees that have already been paid outside of closing. Like the buyer paid for an appraisal outside of closing. You know what we're going to do with something the buyer already paid outside of closing? Ignore it. We don't care about it. We don't want to make them pay. We don't give them credit for it, and we don't want to charge them for it again, so we just leave it alone. They already paid it? Great. Doesn't impact us today. We only care about things going on today. Does that make sense? Okay? And about the only thing that would ever show up would be an appraisal fee or a credit report fee, and they'll be very clear and say, was paid at the time of loan application, or was paid prior to closing, or was paid outside of closing. If it's paid outside of closing, we don't care about it. Yes, ma'am, Rhonda.
Just give some clarification on the line for buyer debit when it says recording deed and deed trust. Is that two different things?
The deed is indeed a different thing than the deed of trust. So, if you're asking that question, that tells me you need to go back and look at the two things involved in a mortgage note, right? You have the deed of trust, which gives the lender collateral. What does the deed do? Transfers what? Title. So don't we need a deed? Who's going to be the grantor on the deed? Grantor would be who? The seller. Who's the grantee on the deed? The buyer. The deed of trust gives the lender collateral. Who's going to be the grantor on the deed of trust? The person who just what? Who just bought the property, and who's going to be the beneficiary on that deed of trust? The lender is. Does that make sense? So they are indeed two separate documents. And they both be recorded or paid for by which party? The buyer, because they both relate to the buyer. That help? Yeah? No? Still don't know what difference is between a deed and a deed of trust, or
I
what?
was thinking about the installment land.
Okay, so in an installment land contract, you wouldn't have a deed to record yet, because you wouldn't record a deed until when? Until after you paid it off. But in any normal purchase, you would have a deed to record right from the jump start. So let's talk about walking through the steps of recording. When the closing attorney goes to record the documents, who owns the property? Before we start this process, before we record a document, who owns the property? The seller does. The seller likely has a deed of trust attached to that property because they likely have a what? A mortgage. So the first thing we need to do is get rid of that mortgage. We do not want to transfer title to the new owner with an old lien still attached. Does that make sense to everybody? So what do you think the first document that's going to get recorded is? Satisfaction, release. The seller's satisfaction of mortgage. Because what that's going to do is remove the lien from the property. Does that make sense for everybody? So now who still owns the property? The seller does, but now they own it free of what? Free of liens, free and clear. For that 1 second. As soon as that satisfaction is recorded, now the seller owns the property free and clear. What is the next document that's going to get recorded? They can't record a deed of trust yet. You can't give collateral if you don't own the property. So what's the next document?
Record the deed.
Record the deed. You have to record the deed because now we need to transfer ownership from the seller to what? To the buyer. For one glorious moment, how does the buyer own that property? Free and clear. Because we have not yet attached what to it? A lien. And so what's the next document going to be in that progression? The deed of trust, which attaches the lien to the property. So now the closing attorney can walk out and the buyer owns the property with the new lien attached to it.
So could a way of figuring out the deed of trust is trusting that the deed would be given to you by the mortgage company once it's paid off? Something like that?
If that works for you, sure, yeah. Yes.
I mean, I get it, but I was just trying to think.
Yeah, I mean, if it works, then absolutely use it, you know, and that's what you are. You're trusting that when you pay it off, they're going to release that lien. So, sure, I think that works.
And they trusting
you, all right?
and they trusting you that you go pay it.
They
Because if you don't, they're going to take it.
Well, they're really not trusting that you're going to pay it. If they trusted that you were going to pay it, they wouldn't make you file a deed of trust, right? And they should call it a deed of no trust.
That's right.
They should call
Because
it
if you
because
don't
they
pay
do
it,
not trust that you will pay yet, which is why they're making you give them collateral in the property. Okay? All right, so we good on all these things. Attorney's fees. Who would pay for the attorney?
The buyer.
A buyer would. That's a buyer debit. Homeowner's insurance,
Buyer debit.
buyer debit. And then any escrows for taxes and insurance would be a buyer debit. Here's the thing. Don't worry about anything else, because if you get these things in the correct column, the math is just this simple. Total up your buyer debits, total up your buyer credits, total up your seller debits, total up your seller credit. You got 4 totals now, right? And the buyer's cash at closing, what we call cash to close, is just the difference between the 2 buyer numbers. Big number minus little number. You can do it now. You're going to want to do it the whole class, so you can go. Big number minus little number. That's the buyer's cash at closing. In other words, that's how much money the buyer needs to what? Bring to the closing table. You need a check, certified funds for this amount of money. And so that's going to entail their down payment, it's going to take into account their closing costs, it's going to take into account money they've already paid, like due diligence fees and earnest money deposit. That's the all-in number. This is how much they need to bring to closing. That's the whole reason we do this thing. Does that make sense for everybody? And then if you take the difference between the seller's credits and debits, what is that number going to be? The amount of money that what? The seller receives at closing. How much money they're going to walk away with from the closing. So take the difference in the buyer's numbers That's how much money the buyer owes. Take the difference in the seller's numbers, that's how much money the seller's going to get.
Okay, Katie.
In the real world, you gotta worry about negatives and positives, because technically the seller could have to bring money to closing, or technically the buyer could get money back at closing, but it will never be that way on a test in this class. So you don't have to worry about any negatives or positives. Just whatever the difference is between the two buyer columns, that's how much money the buyer needs to bring to closing. Whatever the difference is between the two seller columns, that's how much money the seller is going to get at closing. Everybody okay on that thought process? All right. Now, this is what one looks like. This is what you're going to have to deal with on the test.
How many questions like this? One, two.
They usually give you about 6 of these. No. One.
There used to be like 3.
One. Thank God. One.
But it used to be at least 3 or 4. 3 though.
They used to give you one closing statement question that had 4 questions from it, which was actually better because if you did all this work, you got 4 questions right if you knew how to do this. Now, it's all this work for one question. Now, here's what I'm going to tell you, and I really want you to take this advice to heart. Folks, it's one question. It's one question. You're going to see that it's going to take you 30 minutes to answer this one question. So when you come to it on the test, what are you going to do? You're going to skip it. That is not an option. I'm not suggesting you do it. I'm telling you, skip it. Because what I don't want you to do is run out of time and not answer 8 other questions because you spent a half hour tangled up on this one. Does that make sense? Yep. Now, I'm not saying don't do it. I'm saying do everything else first. Check all your answers first. Bubble in everything first. So you're literally ready to turn the test in and you're like, oh, I need to go do the closing statement. And use whatever time you have left to work on the closing statement.
Yes, if you don't have enough.
Or if you don't have time left, you just guess, but I'd rather you guess on 1 than 8. Does that make sense for everybody? And I have seen people do that. It's not going to be the last test on the question. It's just going to be mixed in with the other math. So as soon as you see this, you're like, no way. Not right now, right? I'm going to finish everything else. And here's the other reason I give you that advice. The other reason I give you that advice, you can know how to do these. You can have it nailed and still get them wrong. Because there's so many little calculations to do here. You're going to have like 20 different things you have to calculate and total up. Sometimes you calculate them all right and you just total the columns wrong. It's very easy to make a keying mistake here. And here's what happens. You go down a rabbit hole that your brain never recovers from. Because you spend 30 minutes doing this thing, and you get your answer, and you're proud. And then you look at their answer choices, and none of them are close. It doesn't happen. Those of you who have done it before, it happens, right? And so then you feel like you've already invested 30 minutes in it. I can't abandon it now. Now I'm going to spend an hour on the damn thing. Because I'm going to go back and I'm going to start checking everything. I have seen people get sucked into that vortex with this test question. Are you with me on this? Yes. So when you come to it, skip it. I don't care how comfortable you are, just skip it. Go do the rest of the test, and then assuming you have time when you get to the end, this is the one you come back for. And when I say skip it, I really do mean skip it until you're literally ready to turn the test in. You've checked your bubbles, as Cam said. You've checked to make sure you don't have stray marks anywhere. You've done the whole 9 yards. And now you can go back and look at that. You got 45 minutes left? Great. Let's go do the closing statement.
And just to let you know, it is important to check the bubbles, because I sure did last time the question right and circled the wrong.
Well, a lot of times people do that. They circle the right answer in the test booklet, but they bubble the wrong answer, and we have to check what's on the bubbles.
All my math was right. You remember that? All my math, everything was right.
Yeah, right.
I said I bubbled the wrong one.
Right. She said basically answer 4 or 5 questions and then bubble those 4 or 5 rather than try to answer the whole 100 questions, 112 questions, and then go bubble the whole thing, because you can get off real easily that way. What she's saying is either bubble as you go or bubble like 1 page at a time, like answer a page, and then go back, and because there'll usually be like 3 or 4 questions on one page. So if you answer that one page and then go bubble in, you know, that way you constantly check it to make sure on the right number.
Yeah,
Because it is a big deal.
yeah.
I gotta grade what you hand me.
One of the biggest things that we cross-check for is misalignment.
Yeah, right. Yes, sir.
Is your
Yeah, I think
experience been
that's
that
one back.
when people go back and double check
One
their work, it's not necessarily that their first answer is always right, that it's better to go back and or
Gut instinct.
Gut instinct.
Gut instinct. First answer is usually the best answer. The only, as far as the test taking strategy, the only ones I want you to change are ones that you, it literally hits you like a ton of bricks later on. Oh my God, what was I thinking on that one? You know, like you read something else on another question, and it's like all of a sudden you remember, oh God, it's 7 days right of rescission on new construction condos, and I answered 5 days. Let me go find that question and fix it. Don't ever change one where you're debating 50-50. If you're debating 50-50, whatever your first answer was, stick with it. Because I can tell you, I've actually statistically looked at this. I've gone back and kept statistics of, you know, total number of questions that people change their answers. So I can see when you bubble one and change into another one, and they generally would have scored, on average, about 2 questions better had they not touched any of them. Usually what happens if they change 6, you know, they had like 3 that they had right, that they now got wrong, and they only got 1 right that they had wrong previously. So they would have been better off to just leave it alone. They would have had 3 right, and ended up with 2 right, you know, as a result of change. I always think of it like this. Yeah, did y'all watch The Price is Right when you were growing up or when you were younger? You remember the stupid pricing game where they had to run around and put the prices on the different things and then hit the buzzer and it would tell them how many they had right? And then they'd run back out and they'd come out and they'd hit the buzzer and it got worse, right? That's the way changing your test questions is. It's like, yeah, you might get this one right, but those 2 over there that you changed, they're wrong now. So, gut instinct, first instinct's usually best.
Will we know when we leave class after the final?
I usually email you within 5 minutes after you walk out the door. I mean, I don't grade it in front of everybody else because I'm in here proctoring, you know, and you may fall down in a puddle of tears for happiness or sorrow, you know,
We used to sit
if I tell you instantly. So what I generally do is I will sit here and I have my phone. You've seen me grade with the little phone app, right? So as soon as you hand it to me and you walk out the door, assuming I don't have like 8 people handing it at one time, I will sit there and I'll scan it and I'll grade it, and I have like a pre-formatted email, congratulations, you passed, and blah, 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 or sorry, you didn't, and here, you know, and I just cut and paste whichever one and send you an email.
So that way you can avoid the standing around like.
So you usually,
crying.
you know, you usually know within 5-10 minutes after you hand me the test most of the time. Now, that'll vary a little bit for if you're at the very end, because at the very end usually I'll have like 8 of them at once, and so it might take me 30 minutes to get everybody an email. But for the most part, you will definitely know that night. I'm not going to keep you in suspense overnight. You'll know that night.
Oh, that's better than what we used to do when we just sit there and wait.
Well, I used to have to grade on my hand. That
I
takes
remember that.
forever.
That's what
Yeah.
took months.
Yes, ma'am.
Since we're talking about scores, am I allowed to ask the question?
What question is that?
About,
I don't know what question it is. So I can't answer that.
well, I'm just trying to prepare the deck just in case. About the 60%.
Oh, as far as what, can you retest? Is that what you're asking?
Mm-hmm.
Yes. So to be eligible to take exam number 2, you have to score at least 60 on exam number 1. You're not automatically eligible to take exam number 2. You're only eligible if you score 60 on exam number 1. But I can tell you this from experience: you're not passing exam number 2.
I tell you
I
that.
can definitively
I
say
guarantee you
that
that.
because nobody ever has.
I ain't lying. That exam.
Nobody ever has.
And you know
Well,
what?
and so that's what people always ask. People always ask me, is it harder?
Oh my God.
I'm not going to say it's not. I don't know. I haven't taken it. Remember, I haven't taken either one of them. So I don't know if it's hard or not. But what I can tell you is remember who's taking exam number 2. The only people taking exam number 2 are people who've already what? Failed exam number 1. So, you know, you're not dealing with, a sampling of people who performed particularly well in the first exam anyway. Does that make sense? You know, I'm not trying to...
I missed completely what you were talking about.
So they ask, about taking exam number 2. If you score at least a 60 on exam number 1, you're eligible to take a retake. There are 2 versions of the final exam. In the class. In the class. There are 2 versions of the final exam. You don't want to see exam number 2 because nobody's ever passed it.
You don't.
I've never had one. Not one. I'm not lying to you.
Wrong, I thought you
I've never had one.
I'm sorry.
It's a commission-generated exam, and I've never had anybody who failed exam 1. Now, if y'all want to, we can test my pet theory that it's no harder. I can give y'all exam 2 as the first exam if y'all would like. Would y'all prefer to take exam 2 as the first exam?
No.
You want to take the one that nobody's ever passed?
No.
I'll be glad to give y'all that one. Come on now. No, I cannot give it to you as a practice. Yes.
So what if someone makes a 79.3?
I was thinking the same.
That's a 79.
So they don't get.
That is not an 80.
So 79.5?
79.5 is an 80.
And that's what happened to me. I missed one, that bubble, and I
I
missed
believe
the
the exact
And that
math is you
second
miss
test,
23, I believe. 23 is an 80.
Do your best in the first test.
23 questions, I believe, is an 80, if I'm remembering correctly. Well, I mean, you can do the math. What's 112 times 20%?
Oh, I was gonna say how many questions?
That's
That's
right.
12 questions.
It's 112 questions, so 112 times 20% is how many?
22.4.
22.4, so it probably is 23, because 23 is probably like a 79.58 something, so you pass with an 80.
That's that one
So it's
bubble.
either 22 or 23 that you can miss.
That bubble.
Is it a point?
Oh, study. Study.
No, remember, how do you score it? It's always the number you got correct divided by what? Divided by the total number of questions. It's always the part divided by the whole. The number you got correct divided by total number of questions. So if they're a little bit less than 1% each because there's 112 of them.
Well, Travis, I think being that with this closing statement, before when I took it away, the 4 question was on there, and people spend a lot of time on the 4
When it was 4
questions.
questions, you had to spend a lot
And
more
you
time.
lost
because
a lot of
It was a
time.
big percentage of the exam.
Yeah, but now it's only 1, so that's gonna make a major difference.
It does make a difference in the timing. Yes, absolutely. This used to be 4 questions.
Yeah,
Only 1 closing statement, but you had 4 questions. What they wanted to know was the 4 numbers. They wanted to know what were the total seller credits, what were the total seller debits, what were the total buyer debits, what were the total buyer credits. They wanted to know each individual number. Those were the 4 questions. Now, they just want to know 1 question. Here's what the 1 question is going to be. How much cash does the buyer need to bring to closing, or how much cash is the seller going to take away from closing? Which side do you think they're most likely to ask you about?
about the buyer.
The buyer side. Why?
That's reality.
Well, not only the reality, it takes a lot more work to do the buyer side. If they ask you about the seller side, you should do the happiest dance you've ever seen, because the seller side is like 3 things, right? It's the sales price, the commission, the due diligence fee, and the property taxes, and leave me alone. That's all there is. The buyer side, you got origination fees, you got interim interest, you got all escrows and lots of stuff. So, this is what 1 looks like. So for the remainder of tonight, you're going to do this one, okay? And you have the answer, but that's not going to help you, because what you need to do is make sure you can come up with those answers,
So we got the answer.
right? So the first thing you're going to do is set yourself up the 4 columns. Buyer debit, buyer credit, seller debit, seller credit. You need plenty of blank paper. I've got blank paper if you need it up here. I've got some blank
How she
paper up
said
here.
she
and I can
already
go
got
get
the
some more.
answer? What answer?
Yep. Okay.
Wait, you
So-
said we have the answer?
It's on the next slide.
Oh, so we got 2 examples. Okay.
There's 2 examples in the packet.
But we only have to do 1.
We're working on this one. We're working on this one.
Time.
Can we run to back?
I'm sorry. Yeah, you can go ahead and take a break. Yeah, go ahead. You come back and work at this on your own pace. But I want to see, I'm going to be walking around and I want to see you working on these. So you need 4 columns. Seller debit, seller credit, buyer debit, buyer credit. 4 columns. Don't skip around. That's another piece of advice on these. People start to pick and choose, oh, I know how to do this one, I know how to do the commission, I'm going to do that. No. Because if you don't know how to do one thing, guess what you're going to be doing anyway? Guessing. So go one by one, mark them out. Deal with them one at a time. And as you get questions, raise your hand, I'll come see you. That was fast. Thanks.